Hey there, everybody. How you doing today? It is Monday, February the 2nd at 1:52 Central Time. I'm just doing this quick recording mostly for a few family members that also invest in mining stocks, but I figured I'd put it up here to the public in case anybody else has any concerns or wants to know what I like to do in my free time trading. And I've been really interested in the precious metals mining sector for the past 5 years, I guess, really. So I have a good portfolio on Fidelity, and mostly it's on Interactive Brokers, so that I can buy the actual stocks on the Toronto Venture Exchange. A lot of times the stocks are really, really light if you utilize the OTC, and sometimes Fidelity has like a $50 fee. For example, one of the stocks that I'm looking at is Kingfisher. If you buy this on Fidelity, this has a $50 fee per every time you buy or sell. So it really depends on what type of OTC stock it is. There's like 4 or 5 different OTC index markets, or I forget what that term is. But anyway, that's a side note. Let's get into it. I don't actually own this stock. Anyway, it shouldn't really be on that list. I'm just kind of tracking it there. This is a move of gold over the last 3 months. Let's zoom in a little bit more here and kind of move to the left so we see a little bit better of a profile. This is the move on gold basically since, let's get the date there, December 11th. These are 1 hour bars. And looking at this move, it is up 10% since then. To analyze this a little bit further, the way market volume profile theory kind of works, if you're unfamiliar with the term, you kind of, uh, on the right, these are basically volume at price. So this is a history of trades instead of the volume bars at the bottom. This is a history of volume traded at a given price. It really gives you a good idea of, for example, this looks like rampant speculation to me because granted I'm using history and pretending I'm predicting the future. It's not always this clean. But if I were to look at this chart and said, man, where would we have a pullback to? It would be either this trading range or this trading range, or maybe one of those two before. Because if you look at what normal price action is, the market rests. It has a period of resting. It checks a certain price that is rejected because buyers think it's unfair. So it falls back down, and then it typically checks the previous range where sellers think, hey, that's not fair. I'm not gonna. This is too low. I'm not gonna sell. And buyers also think this is a great deal, so I'm gonna buy. And so price goes back up, and it kind of has this action where it figures out where's the most fair price. That's actually the purpose of markets, to find out where the most fair price is for everybody. And as new data comes in, like inflation and other governments buying gold, like China, you have a new price, and it keeps on going up because this is tracked in dollars, and dollars are not doing so hot. But if you look at this section, this looks like a lot of FOMO. People maybe looked at the top categories of 2025 and said, oh no, I was investing in the wrong sector. And as you have more and more speculation, more and more people get FOMO, and these are all just really weak hands because they just don't have the underlying stock. They don't have a rational basis for their investing. It's just kind of, well, let's just buy magic and make money. And it works for a little while, which brings in more and makes it work a little bit longer. But eventually you have a price check. And where does that price check happen? It's not a huge surprise. Again, I would have said this before, but where would it fall to if it falls? Well, where's the last time we rested and actually had a good base of value build up? A little bit here, and you can see we did kind of go well below that and then back up to this level, but that wasn't enough of an actual acceptance. Didn't trade there for long enough, and it was just way too high. So it's not a huge surprise that we are balancing back down into this range. We might fall back down to this range. Check this again. As long as price holds in, one of these two ranges, it's not bad, right? This is pretty much the zone that we're at, and after this kind of double top here, it's not really true because it's higher, but nothing is as perfect on charts as some of the patterns make them seem to be. But anyway, again, just kind of looking year to date, take a breath. Gold's up almost 8%. Silver year to date, let's make sure we are year to date, is up 13%. So it's not really all that bad of a move down. It kind of needed to happen anyway if we are going to move back higher. Moves higher happen from a move of rest. That's pretty much the market auction theory. So in order to move up, you have to have a period of balancing. And we just didn't balance. The market didn't really determine what was fair. It just kept going up and up without checking the previous price history. So it just kind of makes sense that we'd fall back down to this price. So yeah, it was scary. If you look at this over the last five days, this is really unprecedented moves. I mean, gold used to trade like $10 a day, 15, $20 a day, sometimes $30 a day. And in the overnight session, it moved $400. I mean, it's just, these moves are crazy. But yeah, it's a little bit crazy, but when you zoom back out and kind of take stock of, okay, well, we're not too crazy. So how did this impact stocks? Let's look at pretty much the last 30 or so trading days here. I'll just try to keep this frame of reference. So over the last 30 days, gold's up roughly 8%. Let's go on and look at the GDX. I should have the GDXJ there. But over the last month, the GDX is up 7.14%. So still, on the year to date, it's still up, well, about the same amount. But anyway, again, here, it doesn't look quite like the gold chart because I think maybe these traders were a little bit more sensible, saying, yeah, we don't need to buy out of FOMO, but it did fall back down. There was a little bit of craziness, and then it fell back down to this trading range here and dipped into this one maybe a little bit. But overall, I'm not too worried because pretty much all of these stocks, they say the same thing where, here's Montage. We had a really good balancing zone here in Montage, and then this is when the speculation started going crazy. But we're actually still up since that move. So, I mean, that's a pretty good move up. Almost 26% or so since that initial move up. Abra Silver. Let's go back to. So that's basically even. But let's go back to the 1 month chart because it's just anything less than 1 month is, unless you're trying to gauge an entry where to get in at or exit. It's just anything less than 3 months is what I typically use. But just for kind of looking at this most recent trend that happened in the last month, let's look at 1 month, and we're still up 9% on Abra. Thesis Gold. We're up 19% on 1 month. Banyan Gold is another really good one I love. We're up 14%. Liberty is actually up today, which is amazing. On 1 month, we're up almost 25%. Challenger Gold was a little bit more of a riskier investment, and we're basically flat on the year. That's fine. And Kinnerland is one that I'd really like some more stock in. There just hasn't really been much of a good time to buy until I would say almost now. This is actually a pretty good price check. We went up high and then we fell down, and we're still basically floating at the very top of this previous price section here. So I think this would be a good entry. It is a little bit scary because it feels like you're buying at the top, but I don't know when else to add. And I have some money sitting on the sidelines. Kinderland is one that I would really love to own more in. So I think I'm going to buy some more Kinderland, and then I'll just set my stop somewhere around here. And if we just go in here and balance, then I'll have just lost a little bit on that stop. But it really protects my downsides because I do own a nice profit on Kinderland over the last year. It's been a very good stock for me, but I got to kind of protect my profits. I don't want to buy here and then watch it ride all the way down to something like here. This is their trading range, where if it falls to this, I really don't think it's going to move below this section. So that's kind of what I'm looking for and why I'm protecting that new entry with the stop up there with Kinderland. And if I'm not sure, doing some stops are kind of a little bit. I actually don't know how to do that in Fidelity because I don't really have stops ever that I use, but I think I'll try implementing an exit plan with Fidelity there. So I can walk through how to do that actually, but let's go to, let's see. Cassier is another one that I would like some more in. Over the last year, it's been up 113%, which is excellent. Not as good as Banyan over the last year. Banyan's been a really good one over the last year. Liberty's been a really good one over the last year. But I really want some more Cassier because my position is, I think I only have like $400 in this stock, and that's with this move up. So I would like to look to add more. I just don't really know where that is, other than maybe right now. There's been some decent balancing here. Let's go to a day chart. These stocks are just too lightly traded to almost view it in hour bars, but I like the data better in hour bars. But anyway, yeah, let's I think the wise move is to wait on Cassier. If I miss a balance and a move up, that's fine, but just this looks way too shaky. I think I might be able to get a better price if it falls down a little bit more. So this is one to watch for me. I'm gonna put an alert in. Actually, let's add alert. And yep, I'll just use my default notifications. I won't click there because I think it shows my email, and I don't want that necessarily online, and I don't want this to expire. So let's do that. And now we have an alert set for if we fall to that price. I'll probably actually put a limit order in Fidelity at roughly this price, maybe a little bit higher, and then I can just keep an eye on it and track it and adjust it as we go. We move on down to my copper stocks. These are actually ones that I would have loved to recommend to family and friends, but I just didn't know when it would take off. It's a little bit less certain maybe than gold, and I don't know. I've owned Surge and Hot Chili for a while, and if you zoom out to further than a year, it's been kind of a rough ride with Hot Chili. So I bought around this range and then more during this dip, and I didn't know I was going to do this. Obviously, if I did, I would have bought a lot more. But since that low, it's been a very nice gain. Surge, I think, has been even better. Yeah, look at that. I wish I would have bought a lot more of Surge, but you just never know. And so I didn't think it would take off and move like this. Otherwise I obviously would have recommended this to everybody, and I would have bought more myself. But it's a pretty stable price right now. I don't recommend buying at these levels because it's just the top and it hasn't moved down enough to buy more. This is one that I really like, but this one's nickel. It looks like they might have a copper resource too, but I don't know. It's just too risky to recommend. And then this is actually the one on the Venture Exchange. This is the OTC. But let's wrap up by looking at some of the uranium stocks. Homeland is pretty flat. I wish I would have bought more here. I actually had a buy order resting down here. I missed it, and I wasn't active enough at moving it up, and I missed this move. And then after I missed that move, I had enough discipline to say, okay, that's fine. I have enough Homeland stock. I don't need more. I wish I would have bought more there. But, there was a good chance it could have fallen back down to these prices, and that's what I was waiting for. And you need discipline like that to not chase. Otherwise, well, if you chase a trade, this happens, and you get caught holding the bag. You don't want to have that happen to you. That's a horrible feeling. Don't confuse a bull market for brains, and so that's what I try to always remember. Before this last 2 years, trading in the mining sector has been hard, very hard. And so you got to take that experience of the bad times and the bear markets with you and pick the best of stocks that move up even when the base metal price is moving down. And you can kind of see that, just to kind of wrap up here, right? You can kind of see that the best of the stocks that I would view as the best, Montage, Abra, Thesis, Banyan, Liberty, these are my strongest positions. Kinderland, they are better off than the GDX. The GDX year to date is, granted it's only 1 month, but that's around 7.6%, which is the price of gold. But all of my other stocks that I would say is, in my top category are more than that year to date. And so it's good, and it's also a good feeling, and it's good confirmation that I actually picked some of the better stocks that the rest of the market thinks are the better stocks. So yeah, I think that pretty much wraps up where I'm at. Kingfisher, I really want in on this one, but I'm stubborn, and I'm not going to buy unless we get back down to, let's go 3 months. I might buy if it dips back to this range. I think I'd probably buy maybe half of what. So, for example, if I wanted to invest 1,000 in here, I might buy 500 at this range if we dip back in here. And then if we dip back in here, I'd probably buy another 500. I'm not going to buy at this price. And if I miss the move up and it never falls back down, that's fine. But it's just, there's too much, even though I said what I said about this, and I think we're going to balance here for a while before another move up. We could also balance here for a while and then get a move down. Or there could be another sharp move down, because if you look at this chart over a year, there's a few other sections that we might actually hit. I really don't think we're going to head back down below 4,000, back down to this range. We bounced here for a lot. This is a really strong base of market action before a move higher. And we have not come even close to checking this price. This, not so much. So I could see us hitting, the low 4,000s again this year before we continue to move up. But the underlying reason for gold is other countries don't really like what we're doing with the dollar. And we're at a massive amount of debt. We're headed towards more inflation. Here's a 5-year chart of the dollar. So yeah, we're kind of at a turning point in dollar. Is the dollar going to get stronger? Are other countries that see us sanction countries like Russia and basically freeze their treasury assets held in dollars, are they going to be more or less confident of the United States doing the same to them? I would say less. And so they're getting rid of dollars and treasuries and investing in other things. And you can see that here on the dollar index. Over the last year, the dollar is down almost 10% based on most of these other major currencies in the world. And that's telling, and that's the rest of the world kind of realizing, hey, well, maybe let's store and hold something of actual value instead of something that loses value. Anyway, that concludes this video. I hope that helps some people, and I hope you all have a good, level-headed day and year of trading, and God bless.